All right, so we're going to get started. Hello, everybody. Thank you for joining us today for our special webinar titled Cash Flow Management Tips and Government Aids. We appreciate everybody taking the time to come on in. I know there's going to be a few people that are going to be joining in. For those of you who don't know me, although I do recognize quite a few names here, my name is Euros Milkic. I'm a partner here at FL Fuller Landau, and I'm joined today by my colleague Christopher Nikas from PVisio by FL. Chris, who's going to introduce himself momentarily, is an assistant virtual financial advisor, and he's a member of our crisis relief team. In the last few weeks, he's been quite busy answering several questions from entrepreneurs, and he's actually made a lot of submissions for the CEWS special requests for financing assistance on clients' behalf. So he's going to get into that in a little bit. We're going to be discussing together cash flow management during a crisis in general, and how to leverage government support in all this madness, if you will. I'll take a quick moment to let everybody know that all microphones will remain muted. If you come in, if you can please mute that if it isn't already done. I know most of you, or virtually everybody, has done that, so thank you. It's going to make it a more enjoyable experience for everybody. You can still ask questions at any time via the chat function, and that should be located at the bottom of the screen. We'll do our best to answer them during the Q&A periods. We can also take emails later if there's any questions that don't come to mind while we're doing this webinar. Our email address should be posted right over here. That's right, and Chris should have his as well at the bottom left-hand corner of his screenshot. And for a better experience, I do recommend that you switch to the gallery view, and that should be at the top right-hand corner of your screen. The only downfall of that is that, unfortunately, you'll see most of the time my face, which might not be so appealing as I'm going through this. So bear with me on that. I can't do anything about that. Our agenda today will be firstly to go over some cash flow management essentials with Chris, and then we will segue into some existing government relief measures, and we'll take some questions in between all of that. So without further ado, Chris, I'll let you formally introduce yourself.
Yes, hi Euros. Thanks everyone for joining and taking some crucial time out of your day to listen to us speak for a while. So I'm working in PVisio's virtual financial consulting division, and I'm an assistant financial consultant. I work a lot with businesses to help communicate the numbers, provide the link with the numbers to their business, to help communicate performance and help them better strategize and manage their cash flows. I work a lot on cash flow projection models as well. Currently, I think 90% of my work is on government relief programs. So hopefully we could answer all your questions today during this webinar.
Great, Chris. Tell us what comes up often in your line of work.
So in my line of work, like currently you're speaking of, or in
yeah. So I mean, what are some of the things that you would see come up before this pandemic, and then as you're going into the pandemic and the crisis and helping clients and manage all of that, what are the different things, like what are the differences, or is there a lot of similarities of what's being asked from you?
I think a lot different. I think before was more business as usual. So just going over cash flow projections, regular quarterly reporting or monthly reporting with businesses to make sure everything's on track. Numbers are good. There's no shortfalls in the future, just to make sure that business could run smoothly going into the future and they could reach their goals. Whereas currently, with the pandemic, a lot of our businesses were forced to shut down or reduce operations significantly. And everyone is a little bit more in a time crunch to get either working capital loans just to finance their operations, or as well as apply for the subsidy so that they could keep their key employees on staff. So that's currently what I'm seeing a lot right now, is just a lot more rush, a lot more immediacy, and of course, a little bit of panic too from some companies that are struggling a lot more than others.
Right, and I guess part of the success factor in making it through is having a solid foundation in terms of reporting and in general budgets, forecasts. It's a little bit difficult when uncontrollable events like this come about. But what are some of the best practices that you could share with us when you're building out cash flow projections?
Yeah, that's an excellent question, Euros. Usually I recommend, I'll stick to my 3 key points since we'll keep it brief. So number one would be try and build out something that shows different scenarios. So you want to show a worst case scenario, one of a moderate outlook, and one that's a little bit more of an optimistic projection. So just preparing for a rainy day could help soften the blow for unexpected events, such as the pandemic we're currently facing. A second thing I recommend is separating your projections by different classes. This can be anything from separating your projected financial statements by product line to different service lines, divisions, regions. And this can just help better analyze the performance of your business and determine which classes are bringing in more margins or customer value. And in essence, allows you to determine where we should focus our scarce resources and time. And lastly, I'd recommend that you build out your projections on at least a monthly basis, just so the business is prepared for any short-term financial difficulties while still providing a long-term outlook on your business. You don't want to make any changes now that's going to affect your long-term strategic goals.
Yeah, that makes, I guess, a lot of sense, because you want to be able to remain agile in all of this, because there's a lot of variables involved and moving parts, whether it's with suppliers or your own clients. Look, I think a lot of businesses are struggling financially, if not before this, from this. What can a business do to ensure liquidity and allow them to come out of the crisis in the best shape possible?
Yeah, so a lot of businesses today are definitely having some tight cash flow problems. So I would recommend deferring payments as much as possible at this time. This can be anything from your rent, taxes, debt payments, and suppliers if possible. Just be cautious though, because these amounts are still owing. So what this would allow to do is for you to catch up on your collections from customers if there's a lag, or even give you some leeway to come up with other ways to generate positive cash flows. For instance, I have one client who was forced to alter the direction of his production and accelerate the process of digitizing his business. And he's already seeing some positive returns as we speak. I'd also recommend to be as efficient as possible. Cut all non-essential operating costs. Just keep those that you really need to run the business as usual. I'd also be cautious not to cut too much, because it can cost you more once the economy rebounds. For example, we see a lot of employers laying off skilled workers, just to save on costs. And this can prove costly down the line once the market reopens and is more competitive for these skilled workers. Bottom line is, it would be less costly to retain your staff than to look for new hires once the dust settles.
Yeah, and to your point with respect to with suppliers and paying suppliers, I think evidently you need to manage that properly. But communication, I think, is really key there. You don't want to create issues with positive relationships. So there has to be communication in all of this. In terms of adding more debt to your balance sheet, is that a bad idea now more than ever? What are your thoughts on that, Chris?
Yeah, another good question. I think it really depends on your business's situation. Everyone is a little unique in terms of cash flow and how much debt they could cover. I'd say for businesses who shut down or had a significant slowdown in activities, this may just be a matter of acquiring enough working capital at the time being and pick up where they left off once we go back to normal. If the company was always financially struggling, even before the pandemic, with late payments, negative cash flows, poor profits, it can be difficult for any financial lenders to accept risk of handing out loans in case of default. So in that case, we might have to consider a little more creative approach to bringing the business back on track. If the business is still successful at generating positive returns and is doing well, even under these pandemic circumstances, I'd say it's probably a good time to take advantage of some lower interest rates and favorable repayment terms and invest in some growth projects and new technologies. Just don't add debt for the sake of adding debt is my advice. Make sure you could leverage it into something positive.
Right, and we're going to get into the different programs that exist in terms of relief measures and the different financing options as we go into the second part of the presentation. Are there any other tips that you can offer in terms of cash flow projections and building budgets and forecasts that we didn't go over?
I'd say I want to focus a little more on reaching out to your customers. I think this is really important, especially those A+ ones that contribute a lot to your margins. it's very important to maintain that communication. Same thing with our suppliers. You know, if you're really dependent on your suppliers, you want to make sure you don't strain that relationship, and you want to make sure your shipments are coming in, that you could service demand in the future. So very important, maintain that relationship, see how they're doing. Also try and focus on ways to collect quicker from your customers as you're deferring your payments. So give discounts for early payment, invoice promptly, and simplify the payment process, like set up a PayPal account or allow wire transfers. And I'd also want to reiterate the importance of building out your cash flow projections. I notice a lot of businesses today are scrambling to provide them to the banks just to get the working capitals. They've never done them in the past, and now they're preparing ones that are unprofessionally prepared, and it doesn't properly reflect the outlook of the business, and they're being turned down. A lot of companies are being turned down for their BDC or government loans. So look at it as an investment of your time. It'll help provide hopefully future capital allocations to your business from lenders, investors, and it'll help serve as a warning sign for any upcoming shortages, help you analyze performance and better strategize for the future.
Yeah, and I know from my discussions with clients and listening to others discuss on the same topic, my main takeaways are, you know, you have to learn from others, use your network of professionals, try to go up to that 40,000 foot view to be able to look into the future and set your priorities. You know, there's short-term priorities, long-term priorities. In terms of short-term priorities, like you mentioned, Chris, keeping close to your suppliers and your clients, understand their ability to supply and for your clients to pay you. You know, identify if you have economic dependence on a small group of clients. The costs, you mentioned that, cutting out non-essential costs helps build resilience and manage your cash outflows. On that same topic, you should be identifying, now's the time to identify who your underperformers are and deal with that, obviously with communication along the way. And look, we can't beat around the bush. People are working remotely. That's the reality of the new normal for now. I know, you know, a lot of companies are operating as they were before, but to some extent there is remote work involved. Of course, it depends if you're in the essential or non-essential category of businesses. But I think in terms of working remotely, it's an opportunity to look at how efficient is it. Doing it is one thing, but evaluating the level of efficiency at which rate you're doing it is also, I think, important. How you can better the overall experience and improve efficiency there. So whether it's implementing new technology, I think businesses have to have a rollout exit strategy in terms of the easement of restrictions that are posed upon them right now. So if you look at Asia, for example, they're 7-8 weeks ahead of us in this whole thing. And from my understanding, they're still working, you know, at least from a certain point of view, remotely. So look, you can't take, don't lose the opportunity of a crisis, a pandemic like this, whether a recession, you know, some might call it a recession. I think there are opportunities there that exist. And there might be a silver lining, you know, that you got to keep your eyes open and identify really what the danger is other than the virus itself. One of the main dangers is fear. So how do you work on building a realistic, optimistic vision for your team? I think that's important. And one of the bigger things there is communication with your team, constant communication, and sticking to your core values. Because definitely when we all come out of this, people in the businesses are going to be judged of how they reacted when we had these trying times. So I know that some questions have been sent in already. I'm going to go to those. We can also see if there's any other questions that come trickling in the meantime. And yeah, so let me take a look at some of the questions that have been written out here. Just give me one moment. So someone wrote in, what kind size of company should prepare cash flow projections? They wrote, I have a small company and I monitor my bank account very closely. I've always felt that there hasn't been a need for my company to prepare these. So what would be your response to that, Chris?
Again, like I think for every business, even if you're really small, Yeah, it's a good step just to keep track of what's going in and out of your bank account, but it just paints a very small picture of your business. I think especially for small businesses, startups, I think those are the ones that tend to burn through cash a lot quicker than the larger ones that have a little more tools at their disposal to make sure they get out of tougher times. And I would say that it just doesn't give if you're going to look for financing down the line without having them, it could take a long time to prepare cash flow projections. And you're also doing your business a little bit of a disservice by analyzing, things that are not bringing value to your customers or your business, such as like unprofitable service offerings or products. And I would also say that it just offers a nice warning sign. It just tells you ahead of time to prepare for a rainy day, like this month we're gonna fall short on collections, or what happens if we do fall short on collections? How do we prepare for that? How do we strategize? So I'd say businesses of all sizes should have this just on hand, just to prepare for those rainy days, so no surprises are there when the time comes and you don't panic.
Okay, good. Thanks, Chris. And another one came in. When you say cash flow projections, what is included exactly? Is it just a matter of cash inflows versus outflows? Is there anything other to take into consideration here?
I think like looking at cash inflows and outflows or just an income statement is maybe just a simple way of describing it. But normally we provide like a more detailed outlook. So this is tying in the income statement to a balance sheet, because lenders are going to look at your financial position too during interim periods, just to see how much working capital you have. Can you finance current debt levels? So it's very important to have a balance sheet projected also, as well as we have like different subsections showing accounts receivable, how they're aging, how quick you're collecting. Same thing for accounts payable, how quick you're paying, what you owe. And we also keep track of debt levels. So having just an amortization schedule of regular debt payments. So
Okay.
it's all encompassing, basically.
Okay. On that note, I guess with the whole debt aspect, someone wrote in, my banker is asking me to prepare cash flow projections. What aspects should I consider to help securing my chances in securing the loan? So
banks are handing out loans right now. They want to make sure that the business is viable. Of course, they want to make sure that you could generate constant cash flows to service the debt levels, or else there's no money for the banks to be made. So what the banks will ask in addition to the cash flow projections, right now they're asking for about 6 months. They'll ask for, what are your current carrying costs? They want to make sure that you provide previous historic financial statements. So if you have a good historic track record, that could definitely help you get the loan, showing that your business was viable in the past, and just showing what you have lined up in the future. So, what business projects or revenue is in the pipeline, just to show that, hey, down the line, we're going to be collecting this much, our business is going to be profitable for such and such sales or this product. And also you could show that you have the ability to inject funds from other sources too, just to show that you're not totally reliant on the bank themselves. That way you want to show that your business is as less risky as possible to them.
Okay, great, Chris. Well, look, let's move into something that most of the listeners are, I'm sure, well aware of to some extent. What government assistance is available for Canadian businesses? There's been a lot of things that have come out from the onset, and it usually comes out from politicians, and then there's the law that comes behind that, which is why we've established the crisis relief team that includes yourself, Chris, to basically decipher, what's applicable, what's not, how it's changing, because it does change frequently in terms of interpretation. And a lot of the gray areas become black and white. Of course, some remain. So the government has put a lot of support for businesses in terms of financing. What are some of the options out there, Chris?
Yeah, so I'll keep this brief just because I feel like there's a lot to go through, and I'm sure we'll have a lot of questions on this subject too. If anything doesn't get covered today, I just want to mention before I get into it, you could definitely go on flmontreal.com. We summarize a lot of the programs right there. Also on Pevisio.com, we have the provincial government assistance, the PACMI they call it. So you could go on our websites. We have a pretty nice summary, very simple to understand. As well as we give constant newsletters and infographics on LinkedIn. So we try to keep everyone as informed as quickly as possible as the news comes out on a daily basis. So for now, I'll highlight some of the 3 most common programs I get questions for. So the number 1 is the Canada Emergency Wage Subsidy, or the 75% subsidy. This is there to help employers keep their staff on payroll, rehire those that were laid off, and ensure workers get access to a decent income level and help companies position themselves for the rebound, basically. The subsidy is going to cover about 75% of employees' wages for employers of all sizes and across all sectors. This includes not-for-profits, it includes charities, and those who've suffered a drop in gross revenues of at least 15% in March and 30% in April and May. The subsidy will provide about $847 per employee per week, and the period covers between March 15 and June 6. Although recently the government announced that they'll be extending this date. More details are going to come out soon on how long they're going to extend it or when it's going to go up to.
Yeah, and in that note, I'm seeing, I'm sorry to interrupt you, Chris. I'm seeing in Europe, I'm hearing, I should say, that they're pushing it, I think, as far out as to past maybe October even. So who knows how much time is going to be added. Like you said, they've only mentioned that they are looking into extending that.
Yeah, it could be possible that they extended just as much as the CERB, I think, which goes until, I think you could apply up to October, but it ends in September, around that time frame. So maybe they might line up the claim periods for those two, since they tend to match.
Right. Well, we're only going to find out for sure, I'm assuming, in the coming days, and you'll keep us posted on that. And of course, like you mentioned a moment ago, that information is available close to live through our website, flmontreal.com. And just on top there, you should have a banner for under COVID-19 related information and government relief measures. So you can click that and then see the well laid out summary there. So I'll let you continue, Chris. I'm sorry for interrupting.
No worries. It was important to mention. And I'll go into the other 2 programs that I get a lot of requests for is the Canada Emergency Business Account, or the CEBA, which offers interest-free or partially forgivable loans of up to $40,000. If 30,000 or 75% of the loan is repaid before December 31st, 2022, the remaining 10,000 is forgiven. Eligibility requirements for the CEBA, it got expanded, I think, about a week or 2 ago to allow businesses between 20,000 and 1.5 million in annual payroll to apply. So this is based on your calendar 2019 payroll, which is shown on your T4 summary. And the last one is the BCAP, or the Business Credit Availability Program. The BCAP supports access to financing for Canadian businesses in all sectors and regions. It's offered by the Export Development Canada, EDC, and the BDC, the Business Development Bank of Canada. It provides direct lending and other types of financial support at market rates for viable business models. Whose access to financing would otherwise be restricted. So then, viable business models, this goes back to our discussion on our cash flow projections and showing that you could generate consistent cash flows to service the debt levels. The loans will be guaranteed to a certain extent by both the BDC and EDC. So they have 2 different types of programs. They have the Credit Availability Program, which offers loans of up to $6.25 million. And they have a co-lending facility with all financial institutions, where working capital will be handed out based on revenue levels of the business.
Right, and just to mention on this CEBA, the $40,000 financing option, that one is fairly easy to apply for. It's through your financial institution, right? And like you said, you really have to have your business number, your federal business number, as well as the T4 summary on hand to provide them with certain information from box 14, I believe. So it's not a complicated one to do. A little more complex one that will likely require your services are the CEWS application for the 75% wage subsidy. I know in discussions with clients, I think people are trying to manage their costs. So before taking initiating other mandates, whether through a crisis relief team like yourself, they'll try and do it on their own. However, as much as the government has provided, templates and spreadsheets for calculating the amount of subsidy that you're entitled to receive, you come to realize as you go through the motions that there are certain things that are not as clear as you maybe thought would be, and then you have to ask for help. So I would encourage you to not be afraid to ask for help. You're not in the same, you're in the same boat as everybody else. So it's not clear, but like I said, we have established a team that does look at this closely. Part of our tax team is heavily involved in that and really monitoring the law for things that change. Certain aspects of the calculation change, they get clarified. So like I said, it's important to really dot your I's and cross your T's. So another thing I want to mention, Chris, is once all of these programs and relief measures came about, the government did say that anybody who tries to take advantage of the programs being offered is going to be subject to 225 up to 225% penalty of what they received, and potentially up to 5 years of imprisonment, which sounds kind of crazy, but that's what they came out with. So I think it's important to note that none of this is straightforward. And you should seek professional advice if you're not sure on how a specific program may apply to your business. So let me ask you a few questions, Chris, because I am seeing some that are coming in here. But before we, before we get into the questions that are coming in, what are the more popular programs that you see businesses applying for?
So other than the ones I mentioned?
Well, out of the ones that you laid out, the ones that you mentioned, what would be the most popular one that you see businesses are eligible and are applying for? Is it the wage subsidy?
Well, I'd say the first one is the $40,000 loan, because that's the easiest one to get, and it
Right.
provides a decent amount of working capital to work with to cover your costs. The wage subsidy is definitely one that's very popular. We get a lot of questions daily. It's very complicated with a lot of technicalities. I think I was on a couple of CRA question and answers that they had with the CPA order in the previous 2 days, and even they couldn't answer some of the questions on technical, like vacation issues, et cetera, if should be included or not. So this is definitely one that's seeking a lot of professional advice. I'd say the temporary 10%, which I didn't mention, this one was announced previous to the 75% subsidy, and it covers 10% of gross wages paid up to $25,000 per employer and $1,375 per employee, and it's kind of a credit against your payroll remittances. So this one is very easy to be eligible. I think it's just the same, almost all eligible businesses across all sectors, NPOs, charities, and for eligible employee, they just have to be employed in Canada. So very, very simple to apply for. You could do it through your payroll provider, and it works in connection with the 75% subsidy. So you could apply for both at the same time. It'll deduct the amount you receive from the 75% subsidy, but it's just to note that this is one where if people are not getting one subsidy, at least they're getting the 10% in the meantime.
Right, and it's something that you can go back on if you missed it on a few pay periods. You can go back retroactively as long as you adhere to the limits that they imposed in terms of per eligible employee and per entity that's claiming the subsidy.
Yeah, another popular one I get a lot is the CERB, the Canada Emergency Response Benefit. This is not really offered to businesses per se. It's more of an individual subsidy, but it's definitely something we get a lot of questions for. This is the, like the unemployment coverage per se that they're giving out $2,000 payments for 4-week claiming periods up to a maximum of $8,000. So that's another common one. To be eligible, you just have to show that as an individual, you got got laid off or have significantly reduced hours and income levels. So you could only earn up to $1,000 in that 4-week period, or first 14 days for the first claiming period, to claim that $2,000.
Right, and just to clarify also, I know when you mentioned originally for the Canada Emergency Business Account, the CEBA, I think you had mentioned maybe it goes to, it's on payroll from, it used to be on 50,000 to 1 million in total payroll in 2019.
Yes.
In fact, they lowered that from 20 to 20,000, but it's to 1 million is the limit. So that's important to note. And in terms of what the program is there, potentially up to 25% of the loan, up to a maximum of $10,000 would be forgiven if the loan is repaid by December 31st, 2022. So that's pretty much, and I have seen a question that came in on that, so I just figured it'd be important to clarify on that. And like we said, that's done through the financial institution that the business deals with. So Chris, there's a few startups. I realize it might not apply to everybody on this, but perhaps to someone that they know, if not their own business. What's available for a startup company that can't be eligible for the CEWS, in case they don't have something to compare it, like they don't have a baseline of last year to compare it to? They might not be experiencing the drop in revenues because revenues were virtually zero to begin with as they were starting up. So what would you say for is applicable for a startup company, or what should they be looking at?
Yeah, sorry, I just wanted to correct, the CEBA is up to 1.5 million, not a million. Okay,
so they have changed that. All right.
But it is, but you're right, they did lower it to 20,000, just to clarify. For small businesses, of course, yeah, this is definitely a common question that I got a lot last week, for how do they apply, because even, especially for the newer ones where they don't even have a January to February to compare to, this could be an issue. So they used to have the program under the National Research Council of Canada, but that one, applications have stopped. Right now they do offer, they did give about 20 million to Futurepreneur Canada to help support young entrepreneurs across Canada. So Futurepreneur is supposed to hand out payment relief to these clients for up to 12 months. And I think I saw on their website, the loan offering is about 60,000. So you'd have to really get into contact with Futurepreneur to see how they could help you out with this. Other things that might come out is financing through regional development agencies, which could come out soon. I don't know exactly how the regional development agencies are going to give handouts, but that's something that could potentially help these startup companies. And I think lastly, I think the PACME, which is the Quebec government one, but this one is really, it's more of a refund of expenses. So you'd have to really pay to get something back. But the eligibility requirements are a lot easier. You just have to show a connection that your business is temporarily slowed down due to reasons of COVID-19. And just like a quick summary, the purpose of the program is so that employers come out with a more skilled labor or better HR management practices. So they'll help refund some training programs that you put in place to get either licensing or just develop a better workforce. And in addition, they'll help provide some wage subsidies. So if you're giving eligible training programs, for instance, they'll cover 100% of wages up to a max if you didn't get to the temporary 10% or the 75%. And they'll lower that percentage depending what wage subsidies you receive from the federal government. So if you got the 75%, they'll cover about 25% of wages for those in the training program only, up to a max amount, of course. So that's really detailed on our Pavisio.com website under PACME 2019. And I think that's really about it for now. There's not much that could help for these.
Well, you mentioned, Chris, when I know a question came in on this, there's a lot of companies that are struggling to pay their rent. In terms of managing costs, the government has recently come out with the CECRA to help tenants. Are you able to summarize that program? I know that there's there's been a lot of discussions on that topic in terms of, well, it seems complicated and they're looking at potentially changing it. What would be your take on that program?
Yeah, so I'll give a quick summary. So the rent relief program, it should be delivered, I guess, shortly. We're already in mid-May. They were expecting to have it launched by mid-May. It's going to be delivered by the CMHC, which is the Canada Mortgage Housing Corporation, and it's going to be in partnership with the provincial government and the federal government. So it's going to provide forgivable loans to commercial property owners who lower their rents to tenants for about 75%. An eligible tenant will be those that are paying about $50,000 per month in rent and who have temporarily ceased operations or have experienced at least a 70% drop in COVID-19 revenues. The way the forgivable loans will work is the provincial and federal government will cover 50% of the rent. The tenant will cover at least 25%, and the other 25% will be borne by the landlord. These loans will apply retroactively since we're already in May, so it's going to be retroactive for April and May rents, as well as for June. So if you do qualify, and if the landlord, it's up to the landlord to join the program. So if you are a tenant, it's time to be proactive and speak to your landlord to see if they'd be willing to join this program. And in that case, they could either give you a credit on your upcoming rent, or just apply and give you and refund you for the months of April, May retroactively. So
okay.
This is not launched, so we'll still probably see more details coming out, because I think they're trying to cover also those landlords that don't have a mortgage payment, as well as larger tenants, so tenants that are paying more than $50,000.
I have, let's get to the questions, Chris, because I have quite a bit of them that came in, and we had some that were sent in previously. So let's get going on that, because we're going to run out of time if we don't. There's a question here that came in. What turnaround time are you seeing from banks and the BDC for the working capital loans once they get all the required info that they requested? I don't know if you have had much experience on that. I can tell you from the experience that I've had with clients that have applied and provided all the information. It helps if you're already a BDC client, so that makes it a little smoother. They have less hurdles to jump through, I guess. But in terms of exact timeline, I personally don't have an answer in seeing exact turnarounds. I know the faster that you apply for these programs that are out there, the better position that you'll be in. Chris, I don't know if you have any insight on that.
Yeah, for the Canada Emergency Business Account, they're pretty quick.
Yeah, but specifically, this gentleman was asking for the BDC. For the
BDC, yes, I haven't. Again, even on my end, I haven't really seen a specific timeline.
Yeah, I've seen, again, my experience with that has been, the quicker that you apply when something's available. And again, the thing that has been working and it's been smoother for the ones that were already dealing with BDC. That's been my experience. But in terms of turnaround time, unfortunately, I wouldn't be able to commit to an exact turnaround time, because it's not really something I think that anyone from the outside can control, other than how they are managing the influx of requests that they're getting. Let me get to another one here. Just give me 1 second here. There's quite a few of them. In terms of people that have laid off team members, employees, should they be bringing them back on to take advantage of the CEWS 75% wage subsidy? What would you recommend there, Chris?
I think, like, if it's, again, like I mentioned before, if it's really like good employees, good skilled workers, I think it's really important to keep them as long as possible, because we know that rehiring from the outside is, takes up a lot of time and resources, and you don't want to end up with someone who's less skilled and requires more training from you once things go back to normal. So if your business can fund some of the payments, like the other, I mean, they could cover up to 75% of the pre-crisis amounts you were paying them. So in essence, you don't really have to top up the remaining 25%. So I mean, like I don't see a reason why not to apply for it if they'd cover 100%, like 100% of 75% of pre-crisis, and your employees are willing to work for that amount, of course.
Right. And on that topic with the wage subsidy, when someone does apply, someone wrote in here, how long have you seen in terms of people using your services? Would it take from start to finish in terms of running the application, submitting it through the CRA portal, and then the client receiving the funds? I know the latter part of that you can't always control, but what's your expected lead time on that whole process?
It really depends. I think we've seen different things because, of course, different clients are having different work situations, working from home, having trouble faxing information, or sometimes some people are just not working every day. So there's a lag between communication. But in general, it could take up to maybe like 3 to 5 days that we have all the information, calculations done properly, reviewed, and we process the first application. For the second application, it's definitely a lot quicker to do, because we don't have to calculate pre-crisis remuneration, and we're more familiar with the business, how they do their payroll, their pay periods, and all the technicalities. So the second period, which we already started, the lead time is very, very quick. Like I'd say maybe like a couple of days max. But for the first period, there could be some lag depending on what the quality of information that's provided, and communication, ease of communication with the client.
Okay. Someone wrote in, what complications should one expect with the 75% wage subsidy? Again, that's the most popular one, it seems, application process and the online calculator that they see on the CRA website.
Sorry, Euros, can you repeat the first part?
Yeah. So it's, what complications should someone expect with this 75% CEWS application process and the online calculator that the CRA provides on their website?
I think the complication is more to the technicalities, making sure that you're taking into account all of the regulations and rules that were applied through Bill C-14. So just making sure that you're incorporating all eligible employees, you're not including anyone that shouldn't be there, the formula is properly applied. I know you're going to be using the government calculator, but I think some people have already reported errors or double counting from improperly entering information in the Excel sheet, or maybe accidentally fixing the formula. So there's problems on that issue. So just understanding how the calculation works, understanding all the rules, who's eligible, who's not. I think that's really what it comes down to. It's just being like informed about all the rules in the bill.
And if someone hasn't applied for the first application period, did they miss the boat on that, or are they able to go back retroactively like the 10% subsidy?
So no, it's retroactive. So the entire program is retroactive. As long as you paid your payroll, you can make the claim and then they'll refund you the amount. So it's retroactive. The same thing with rehiring your employees. You could rehire them retroactive, so that you could claim the wage subsidy for the first claiming period of March 15 to April 11. So it's yeah, I think that covers it.
Okay, so it's not something that's too late. Another question that came out regarding someone's asking, it's not really with subsidy, it's more with extended due dates that are available in terms of sales taxes. So again, we'll encourage you to take a look at under the website flmontreal.com. You'll see there, depending on whether you're a monthly, quarterly, or annual filer, if you scroll down to the bottom for GST, HST, QST, you'll be able to see the normal due dates and the extended due dates, some of which have been extended to June 30th for the earlier part of the year, where your deadline would be in Q1. You'll have some lenience there till June 30th, 2020. But again, to ensure that it applies properly, I certainly encourage you to check out that link. So I hope that answers. Look, it's been very insightful, Chris. I thank you, everybody, for joining us. We could certainly go longer, but to honor our allotted time and respect everyone's schedules, we're going to stop it here. If we didn't get a chance to get to your question, please, I'll remind you again, our email addresses should be there at the bottom left-hand side of the screen, right over here for mine, and Chris should have the same on his, christopher@pvisio.com. Thanks to everyone again for joining us. We appreciate your time. Be well and stay safe. And we hope to get back to some level of new normal in the near future. Thank you very, very much.